Alright, hello everyone. This video I'm going to be going over a simple strategy that I use day in day out to identify opportunities in the market that allow me to define my edge and trade my edge without too much risk. So going through, I am just using the 9 and the 20 EMA as well as pivot points, support and resistance, and noticing my lower highs and lower low trend. So going through here, right, this is on the 1 minute chart and this is on the 3 minute chart. You can see that towards the majority of the day we had this kind of neutral flag. Okay, you can draw it like that, however, right, you can just see a flag here. I step away from the market at around 12 and I come back at around 3, close to power hour. I look on my Webull app and notice that, hey, this overall flag has now broken and we've breached VWAP here. Okay, but where this flag broke, right, we can see consecutive higher lows being put in. So the reason for this spill off was not only this ascending trend line, but I also weigh much more heavily on horizontal supports. So marking this level right there. Once that horizontal support was broken, right, it has a strong bearish reaction, which not only breaks through VWAP, right, but comes back and retests that previous support. Okay, the idea of sentiment flips on supports or resistances is that this is where longs had just previously bought. Okay, they'd all bought on these previous higher lows as well, but most recently had bought here for a push up. And for those who don't panic sell and have the buying pressure to push price back up, adding that dip, they will stop out at any chance at break even that they have. Okay, so we see that here. So now I come into the market. I have labeled here at 311. Okay, watching 401p for entry on pullback. So at 311 there. Okay, so we'll pull that away. We'll go here on the 1 minute chart and I type that in at 311. Okay, so on this candle, right when we break this most recent pivot. So common term that you guys have heard is look left, right? Your most recent data. And most recently, we have seen that this previous support flipped and turned resistance. Okay, so what should I look for on the next push down, right? Because now we're getting a lower high and lower low trend. Okay, now that I've gotten the next lower low, I know that if I want to go short, I need to wait for a pullback. That's just common sense when trading the market. You should be shorting on the upticks and going long on the downticks. Okay, so I say right here, 401p waiting for entry on a pullback. Okay, we scroll up here, taking 401 puts for a scalp. Okay, and that is at 313. Now, when I use my 9 and 20 EMAs, right, I'm looking at the 1, but not only the 1, I look at the 1 and 3 and the 5 minute for multiple levels of confluence. Just a kind of rule of thumb, the 20 EMA on the 1 minute is practically the 9 EMA on the 3. Okay, so right there, I say that I take a 401 put for a scalp. Okay, 401 put for a scalp, that's at 313. Moving forward, right here on this candle. Okay, and I take a short here because it is on a pullback. It pops up and it respects that 9 EMA, and it's my first initial scale in. Okay, now the goal here is to break this pivot, this most recent level where buyers have stepped in and they're defending. So when I have seen most recently that on my 1 minute EMAs that the 20 EMA has been rejected there and the 9 has been rejected, right? Very common kind of aspects of 9 and 20 EMA trading. I'm going to look for that to happen on the next pullback. So even though that I get a little bit of an early entry there, that's just a feeler ad, and it's not a bad short. It's really not, because this allows me to fill the rest of my position size up here, guiding myself by the 20 EMA, but also looking at the 3 minute chart, right, and it's 9 and 20 EMAs. So taking in multiple levels of confluence here as well, right, guys? Zoom out when you're taking an entry, right? Get as best of a thesis that you can gather. And you can see that when we broke this large wedge there, there was a big sell-off. Okay, that's a very strong indication for sellers to come in and, you know, understand that it's a bearish trend. Okay, so when we got that, we got another one, all the lower lows and lower highs, as well as this break of VWAP and a base. Remember, a base or a retest does not have to be directly on the line. I always look at VWAP as a general area, not a finite line. And it can be right on it, above it, or below it, just as long as this general area is showing some sense of rejection. Okay, I'm sure if I go here on the 15-minute or something like that, you know, you can see that it pops up here, but the EMAs are still holding it down. So it's a rather weak break, and it also aligns with that previous pivot, shoving it off. So going through here, right, I take my entry. Now, when I use the 9 and the 20 EMA, it's one of my best indicators that allows me to ride a trend. But before the trend happens, we have to look at what is crucial for in this consolidation zone or area, for either sellers to defend or buyers to defend. Okay, so moving forward here, I say this is what I'm seeing, right? That previous support turning resistance. Okay, and that is at 324. All right, and I'm saying watching the 3-minute 9 EMA. Right, watching the 3-minute 9 EMA, it's clearly shoving it off, right, using a great you know, indicator here as resistance. And moving forward, I say we need to close below 401.78. Okay, why do I say that? Now, in this trend where we most recently bounced, I see that buyers absorb this by this large bottoming wick here. Okay, so they bought here, and late buyers popped up and bought this all up. So this 401, I said 78, but 77, you know, I was on my mobile app at the time. But for us to clearly, from a short perspective, for us to clearly overtake buyers, we have to see candles begin to close. Okay, so I can just mark this kind of bottom wick here and just draw a box. I wouldn't say this is a demand zone, but just a box where buyers have harbored themselves, right, where they've gathered. And when we get a push up, right, we see that sellers are not letting any candle close over this previous support that has now turned resistance. Okay, very strong level there, aligned with the EMAs. Now, when we're pushing down, I see that buyers are not allowing sellers to push within that zone. I want to see us close a candle into this low. Okay, it's a very key point there. I think I also went here on was it the 10-minute? Yeah, it was the 10-minute. So I want to go here as well. What did I say? Look at the 10-minute candle. Okay, buyers and sellers are fighting over that body on the doji. Buyers present. Oh wait, time to close into this wick. Okay, so when you are going into your trades and you're seeing this doji off of a big push down or something like that, all you're looking for is for buyers and sellers, right? It's a tug of war match right here, but they're trying to close a candle either on the upper wick or the lower wick here. Okay, so that would have been very indicative of what trend was going to occur if you know, buyers close a candle above the doji wick or sellers close a candle below. So as soon as you guys see this, right, this candle closes below the body, like I talked about. Look at the 10-minute candle, buyers and sellers fighting over that body on the doji right here at 327. Okay, so they're fighting over that doji candle, and as soon as they close over into that candle, we see right here on this picture, they close into that candle right there. That's where the larger sellers, the largest participants in the market, have that confirmation, and it's much easier for them to push and create a new low. Okay, so we get that and we achieve that. I want to go back on the 1. All right, using my 1 and 3 minute here for a strong confirmation on momentum. Now, it should be noted that the 9 and 20 EMA strat, depending on your time frame, the smaller the time frame, the stronger the momentum you should be you should be trading. But on a larger picture trend, I enjoy using the 5 and the 10-minute 9 and 20 EMAs, more so the 10-minute. But in this case, this was a strong rally to the downside. And when I go into this trade here, a big problem that traders have is being able to hold on to their winners. Okay, I know a lot of traders hold on to their losers and cut their winners very quickly, and that's just due to lack of understanding or lack of planning when going into a trade, right? Before you enter any trade, you should have your entry, your exit, and your emotions under control, right? The 3 E's. So going through here, how can I hold on to my trend or to my trade once I've taken a prime entry on my short here and here, right? I've now done a ton of work, understood my stop loss and the trend that was at hand, and took prime entries on shorts. How can I hold on to this and get the most of my capital? So what I look for is on the 1 minute chart and the interaction with the 9 and the 20 EMA. Now, if I'm already in the trade, I'm most likely not going to be laddering in. I'm going to just focus on the full size position that I had and moving forward, right? I want to watch how closely price interacts and reacts to the 9 EMA, right? Because we saw here the 9 EMA, prime entry for short, prime entry for short, once again, and it should be the same for these, right? I know that if it pops up, that seller should come back in and take that entry, right? Whether it's me or not, if I want to hold on to the trend, I'm using these to gauge the strength of the trend that's at hand. So also, if you don't use your EMAs, one thing that I enjoy doing is normally on a larger time frame, maybe your 3 minute, but if you're in a bearish trend, obviously, marking your highs, right? You don't want to see a higher high on your candle. You want to see constant lower highs. So if I go through here and I take an entry, right? Let's mark this lower high. Now, I'm not going to stop out because there's just constant lower highs, right? It's aiding and increasing the strength of that bearish trend. So constant lower high. There's another lower high there. And then you get a higher high here, which may spook some people, right? But it doesn't close above. And if you look here on the 1 minute, it still holds within that 9 and 20 EMA, okay? This was another prime entry for a short, okay? When you want to stop out, you want to look at either the candle closing, depending if you're taking a tight risk scalp, which I would be using the 1 minute, or maybe a bigger picture trend. But most likely, I'm looking to stop out if a candle or price action very violently or closes over the 20 EMA. So I was able to take these 401 puts here for about $1.02 entry, and was able to scale them out along the way, right? I scaled out on some pushes down on the major trend rallies to the downside, those strong lower lows. I got scale outs at around 50%. Most of mine out at around 70. I think it was 77% or something. And I let the rest ride along with my EMAs into close, right? Close to close, right? I had a note here. Where was it? One second. All I used was the 9 and 20 EMA on the 1 and 3 minute and using previous support and resistance. It's that simple, guys. That's all it took for me to in a matter of 30 minutes to make 100%er in the market. As well as, where is it at? Oh, keep your flattens ready, right? If we're very close to close here, there's going to be a lot of selling, of course, right? People just locking out their positions towards the end, right? So just be very diligent, of the time and aware of the time, and just closing out anything that you have, right? Especially if you've been trailing along the way. No trader, I feel like, I wouldn't say no trader, but I would say 99% of traders are not holding a full position size all the way down. Don't look at that as a reality or something that you can replicate. What is consistent with the market is scaling out and offloading risk, right? Taking your profit along the way and building your account. There's no reason for me to get the absolute top and the absolute bottom. Okay, my job in the market is to encapsulate the meat of the move. Okay, so I hope that this trade review helped you guys. If you guys have any questions, please post them in the comment section below. And all of these were called out in my private Patreon educational group. So if you guys also have any questions about that, I will put the link in the bio. So you guys, thank you for tuning in. I hope that this trade review helped once again, and you guys enjoy the rest of your evening. And let's have a very successful and patient and consistent new year. So thank you for tuning in.